Good morning, friends. In today's video, I'll be talking about balanced advantage funds, a category of mutual funds. But before that, please note that this is a free educational video purely for the purpose of learning. This should in no manner be considered as any kind of an advice, offer, or promotion to sell anything. Information here is only for investor education only. Okay, now balanced advantage funds, as I've said, a category of mutual funds. Now, what exactly they do is they have, generally speaking, with respect to funds, uh, a dynamic allocation between equity and debt instruments. So, how does that work? So, the fund allocates certain amount of equity in these mutual funds and a certain amount of debt. And of course, there can be changes from fund to fund, but broadly the objective is they dynamically manage equity and debt levels. And how they do that depends upon the individual call of the funds. In certain funds, they do it by comparing certain market conditions, certain ratios, and increase or decrease allocation. Or in certain cases, it could be a call which could be a mix again of various other factors and things which the fund manager takes into account, and also various parameters which takes into account. Now, when I say equity and debt, what does that mean? Equity would mean the fund would be buying equity stocks and other stuff, and debt would mean buying debt instruments like various bonds or other forms of debt investments. It could be corporate investments, deposits, or other kind of things. And most importantly, what an investor needs to look is the kind of papers which are invested in case of debt and the quality of debt holding. And one must look at the pedigree of the fund, the period of performance, how it has worked over various periods of time, the good time period, the bad time period, and not just look at the current returns while considering investing into balanced advantage funds. Now, why balanced advantage funds are gaining popularity, especially in market conditions where markets are high, is because of simple reason that overall they dynamically manage equity and debt. There is less volatility in returns compared to pure play in any other asset class, depending upon the type of investor profile. And overall, the tax implication of balanced advantage funds, which means more than 65% of the money is invested into equity on an average at all points of time, gives it an equity taxation. Now, what does that mean? Long-term investments in these balanced funds, the gains after 1 year will be taxed as per current laws at 10% long-term, and before 1 year, which is short-term, at 15% short-term capital gains. So these are some of the things which I wanted to discuss. I hope you like this video. Take care. Thank you.